All right, traders, good afternoon. This is Christian from Hertz Trade Group, and it is Tuesday, September 20th, one day before the Fed. That's the big day the big event for the week, the main event for the week. And this market in the meantime kind of doing a little bit, I think, what's expected when you've got such a big event that everybody's going to be hanging on every word, every syllable tomorrow of Chairman Powell tomorrow at 2 o'clock. And then, of course, the Fed, the press conference at 2:30. But the market right now is just very, very whippy right now. So when you look at this chart, right, before we get into the price action, and I'll talk a little bit about, some of the things that are going on under the hood. But I mean, this is really this is a nasty looking chart at this point. This is just the S&P 500, right? So every day we kind of talk a little bit about the technicals here and the nitty gritty in here that we're below the moving averages and so forth. But overall, we're kind of just in no man's land, right? We have not taken out the lows, right? I talk about this all the time because I see people get excited about one thing or another. But if you're bearish, this has got to be a tough market for you. If you're bullish, this has got to be a tough market for you too, because we have basically gone sideways and back and forth, right? We've had some swings where bulls can make money, bears can make money too. But as the old saying is, of course, that pigs get slaughtered, because you can't be greedy in this market. It's going sideways at this point. So, the question remains, like, are we going to revisit these lows? What happens down there? I don't know if we're going to get a major bounce. Really, which comes to the point too, is tomorrow is the Fed meeting. Are they going to give us some guidance about when they're going to be done raising interest rates? I think that's the main thing. Like for me, coming into tomorrow and what these interest rate expectations are. First of all, to take a step back, which I was talking about this a couple times today, once we did a Twitter space earlier at 3 p.m. So if you heard me there, I'm kind of repeating a little bit of this, but to see that we're going to raise interest rates again, 75 basis points, and then again in maybe 5 weeks at 75 basis points. What's the end to this? Like, at some point, we hope to maybe hear from Powell that the end is in sight after a couple of those rate hikes. Now, again, they do slow down a little bit. But that could change too. We have seen this change over the last month when it was basically just 75 and another 25 basis points, right? It has moved from 75 to another 75. So what happens after that? Because again, this is just about 5 weeks away that we're looking at November 2nd, right? What happens in December? Right now, it's somewhere between 25 and 50, right? And then, it gets much more gradual and then it flattens out once we kind of get towards the, in the beginning of 2023. Is he going to say anything that's going to change that picture for us? I think the more certainty that we hear out of the press conference, remember that we may go one way at 2 o'clock when all of the official announcement comes out. And then once Powell starts to speak, which he usually speaks for about 45 minutes to an hour, what is he going to be talking, what kind of clarification is he going to be giving us, right? And for me, like, it's to say, how much longer is this going to go on for, right, of the raising of the interest rates? We heard also, which kind of caused some volatility in the market today, we heard Christina Lagarde, how they are going to be front loading and raising interest rates more and more, because that's basically what they're going to be doing, is analyzing every possible rate hike meeting to meeting, right, is what she said. But they have to get inflation down, right? So they're very adamant about that, but they're in a different situation than the US, and they're more teetering on more of a hard landing than we are right now. Again, that picture could change, but it gets very interesting. So I guess, I'm not looking to make any predictions, but they're definitely going to either raise interest rates, I would say at the minimum 75 basis points. There's a slight chance it'll be 100. But then again, it's going to be, what are they going to be telling us for the rest of this year, right? And then the other thing, of course, to keep in the back of your mind is that, if we get some clarification, and the market might rebound. It might actually go up tomorrow, the more clear of a picture that we get. Remember, once we get out of September, when you look at a seasonality picture, which we've talked a lot over the last month about getting through September because it's the worst month of the year. Are we going to get that end of the year rally that usually ensues on a midterm election year? Right. That I think is what I'm looking for. And if he's still kind of as hawkish as he was in Jackson Hole, then we could be revisiting these lows, right? If their goal is to really get inflation down and get prices down, then that could mean a return to the lows and maybe even taking out the lows that we've seen this year, right? Anything is possible, right? And I think that you just kind of have to pay attention and try not to really get hurt, too much with these trades, because, now we could talk a little bit about the dynamics of the market, but the story has been, we've been seeing many, many more decliners versus advancers, right? And if you're trying to hold, even for me, who's holding, like, I won't even call it a mini portfolio. I've got a few positions on, but when you look at the amount of groups that are down in a given day, right, the odds are not in your favor, right? So we talk about that all the time, right? Either the wind is at your back, right, being a stock picker, or the wind is at your face. And the wind is at your face right now. We've seen, and I don't have a chart right now of the McClellan Summation Index, but that's been trending down, right? So that just means that the momentum is down. It's really, really difficult if you're holding mostly long positions to be making money in this market, because the majority of names are going down right now, right? Now they're every video that I give end of day, I try to talk about, where there's the outperformance in the market and what areas are showing strength. But again, you look at the Dow today, 28 decliners, 2 advancers. The S&P, 468 decliners, 34 advancers. So this is not even close to a 50-50 market right now. So if you're wondering, if you're holding a couple positions into every day, long, and your P&L goes down in the beginning of the day, this is what's going on. There's so many more declining names right now. So that's something else that I'm waiting for to see if we do get that flip that happens in the McClellan Summation Index, basically starting to move back up again. But for now, it's, I'm trying to balance some longs and some shorts, right? We saw a big put buyer today, or repeat put buyer in Caterpillar, right? Who knows? Maybe, I don't know what these put buyers know. But maybe they're thinking that they're going to come out and, warn on earnings. That's a big theme right now, that, these names that are coming out, Ford was down 4% last night, ended down 12%, right? Nobody really wants to, you mentioned that you've got problems, right? In terms of supply chain and making your whatever product it is. In this case, it's cars. Nobody really wants to touch you at this point, right? It was down 4%, ended down 12%, right? So we go back to, because we are going to be getting towards earnings season too. Again, which companies are, have their ducks in a line, right? In terms of knowing how to run their business in a challenging environment. We saw that last quarter too. Walmart, Target came out in the beginning of the quarter. They warned, they were like, hey, we oversupplied, right? And then other companies did much better. So who are the savvy, the savvy management teams who've been able to kind of, navigate this really difficult environment right now, where you've got inflation all over the place, right? And supply chain issues. So that remains to be seen. But I think for tomorrow, what I'm really looking for is just some type of clarification about what their plan is. And if it's going to be this month to month where, hey, we're going to take a look at inflation, we're going to see if it's still rising, and then we're going to be hawkish, then it's going to be tough sledding for this market. Okay. If they come out and they say that they're, if Powell comes out tomorrow and says he's seeing some improvement, right? Then we've got something. But if he doesn't say, if he's adamant that inflation is not where it needs to be and there's a long road ahead, then it may be a little bit of a longer road ahead for equity investors. All right, guys, that is it. A couple of stocks that I thought did very well today. I even tried to trade this today, but I just didn't have the conviction in it. Was Apple. I don't do well trading Apple for whatever reason. It's just not my stock. But I did think that there was going to be some strength today in the stock because they announced that they were increasing prices to kind of offset their inflation costs. Globally. So I thought that was interesting. Tesla didn't hold the gains, but still, only down 10 basis points in a really tough market. It's holding the breakout. It's got to stay above, basically this 306.43 for me. And we'll see how that does. And, let's see if I can show you. Right. So, here's what I did today, which was very little. I thought this EQ&R was really interesting. We saw some calls go up in this one, right? So I did add a swing in EQ&R. Let's zoom out a little bit, right? So you may not even know this company. That's fair. I didn't know it coming into today. And that's sometimes how I operate is I try to learn on the fly a little bit. And if it's in a name that I like, if it's in a group that I like, I'll take a shot on it. So this is they're involved with not only are they an energy, traditional energy, but they're also developing oil, gas, wind, solar energy products. So they've got some alternative energies. That turns me on because we've seen other names do very well, like a CEG, right? I also added some Montauk today. It didn't really do much today, but it's got a little bit of a dip here. But any of these renewable type companies are doing extremely well right now, right? I've talked about this before, like CCJ did decently today, caught a little bit of a bid, was up and outperformed the overall market. But you look at this chart, it's still kind of sideways. For as many people have been talking about the uranium trade, right? The uranium trade is more with this type of company, right? They operate nuclear plants, right? And they said that they were at full capacity in the summer. So, to be a little bit creative in this market helps, and to be clever and to find a couple of these things. While everybody's trying to trade URA and CCJ for the nuclear play, this was the one that actually was the one that really ended up working, and it still looks pretty good. All right, guys, I'll leave it there for today's recap. Have a great night and see you bright and early for tomorrow's Fed Day.